All right, so now I'm going to take you through a little bit of the technical aspects that we look for in these setups. I'm going to start with the most profitable setup by far, and we'll look at this team at La Tessia as an example. So right now we see it has, this is last quarter, huge move on earnings. What did they move there? They're up 22% on that earnings move. Now they're gapping to an all-time high. You can't look to buy the stock immediately and expect to gain right away just because look at the move it just made. Now there's a little bit of relativity you need to use when looking at these charts. If this gaps to new all-time highs, what I do for relativity is I look at short-term moving averages. I like to use the 8-day simple moving average, for example, as to depict whether a stock is too extended or not. And for a momentum move, if we see that 8-day, that simple moving average catch up, that's usually a good sign that it may be ready to make its next move higher. But let's look at this team for a second. So it gaps up to new all-time highs. Can't look to buy this thing yet. So what's it do? It just flags on the daily. And then finally, after 4 weeks of consolidation, it breaks these highs. Now, look at it. We see the 8-day catch up. We see the 21-day begin to catch up. And then look at the move that it yields from a swing trading basis. It just continues higher and continues to be a market leader. And it moves 350 to 420 in a few short weeks. That's a great move. So that's a nice little earnings base right there. 4 weeks consolidation and then the move. 4 to 6 weeks is generally the bread and butter of these setups. Why that is, I'm not sure, but that's just how it is. 4 to 6 weeks is the sweet spot. So you take this trade through highs, you have a stop at the nearest support, and you try to lighten the load along the way, and then you get stopped out in this area. So that's an earnings base. It gaps up, it flags sideways for 4 weeks, 6 weeks, whatever that number is. And these are at new all-time highs, as another caveat. For these earnings bases. They don't have to be, but for this one where you need the relativity aspect, where it's just, quote, up too much lately to expect it to continue higher. So then it just goes sideways, digests that big move, and then continues on higher once it breaks that flag to the upside. So we want to buy these new highs when it takes out the earnings day high. 349.50 was the trigger here. It led to a move to 420 in a matter of a few short weeks. So that's the first. So now we'll look at this STX. This is one from a few weeks ago. I think Bennett nailed this one. So it gapped up to this 88 area. Okay, so we can see on a relative basis, this can continue higher in the short run. It only made a 6% move on earnings. So for that stock to continue higher in the short run, that's not asking too much. When you look at a stock that's up, 25% in a day, you can't realistically expect that to continue higher right away. It needs time to digest that move. So we look at this STX, and now the next few days it goes sideways, and what do we love? That earnings day high. We love buying through that earnings day high. So then it finally breaks the high, gives us 1, 2, 3, 4, 5 consolidation days, and then the entry is through these highs at $90. Here's the entry right here. This day right here where it broke the 90. So then look at the move that it yields. And this one's still in progress, this trade, but we can see, it makes a big move on earnings or a decent move. It gaps higher, goes sideways for a few days, and then breaks that new high. That's a really nice setup right there. And we see the move that the stock has made. Another entry I really like is when a stock breaks to new highs and then pulls back in the short term and turns previous resistance to new support. And I'll show you with this FFIV I just traded. So FFIV, all right. Nice little earnings report, gaps to new highs, is up as much as 9% or so on the day and closes around up 6%. So the stock gapped up and moved higher. So we like that. We like the stock. We put it on the watch list when we see that. So then what happens? It begins to pull in. And we see this previous resistance area right here. Very clearly resistance. So now the stock begins to turn this previous resistance area into new support. So boom, we see this day right here. And this is the entry this day right here. When we see this support holding, this 209.50 area, and then we see the stock pushing higher on this following day. So I was buying around 214, 215. You can buy through the previous day's highs, 215.50 area against these lows, and then look at the move it makes. Then those buyers come back once that gap is filled. They turn that previous resistance to new support, and now we have a name continuing higher. So the entry on this one, is this day right here. This is technically a support buy. So now I began taking profit this one today. It made that new high and pulled back, but this is a great risk reward opportunity. And you look on the weekly chart, this name looks like it clearly wants to continue higher. So that's the third setup I'm looking for, is the pullback, first gap up, most important part. The stock has to gap up, pulls into a previous resistance area, turns that to new support, and you buy off that support for a support buy. Now, lastly, and this is very different from the rest, is it's a very momentum setup, and these are specific to growth stocks. And we'll look at this UPST last quarter. So, and this kind of throws, this is what makes it very tricky to catch these moves. UPST last quarter, this name has been a high growth name. This is a very specific category of stock. We need to see great growth in this stock. So they have these earnings August 10th of 2021. This is last quarter. And we look at them. What are we expecting? We're expecting 25 cents on the EPS side and revenue estimate of 158 million right here. We'll just look at those two numbers right now for this for the video purposes. So then they release earnings the next day, and what do they have? They have 194 million. They beat by 36 million, which is what? Almost 25%. They were expecting EPS of 39 cents, and they reported 62 cents. So they beat that number by 27 cents. You do 27 divided by 39, 2 over 3. They're almost beating that by 66% around, give or take. So then the stock gaps to new highs, and this one does not pass the relativity test. I did not catch this one next quarter, but let's look at the move it made. It gaps up to this resistance area, and these are momentum stocks, you have to remember, and it just continues higher. And that is a factor of, look at that move. So it went from, it gaps up, makes this 26% move on earnings day, and it closes the day at 171. How many weeks was this? In 1, 2, 3, 4, 5, 6, 7, 8, 9 weeks, this stock was able to more than double from 170 to above 400 in those 9 weeks. These are powerful movers. And you have to remember, look at this chart now from here. The chart looks very extended. It does look very extended. But when you factor in this massive earnings beat and you look at the growth, and the sales growth was triple digits, over 100%. They were doing everything right fundamentally as well. That's what makes these setups a little more attractive. So the setup here is the stock gapping up to a resistance level. And we just took a similar trade in this AMEH. So the stock gaps to a very important resistance level, gives us an inside day. Didn't give us that weeks of consolidation, but again, the best ones don't wait around. So this one's very clearly still in motion, just getting started. I'm not sure how to work out, obviously, but what led me to the setup was looking at UPST last quarter and how they reacted. Gap to a resistance level, little inside day, and then when we see those buyers come back, we're buying. I bought through the inside day. You can buy that 90-25 area, or you can wait for the real trigger, 90-60 area, and then you have a great looking swing trade on your hand. You head over to the weekly chart. This stock looks like it's going higher. So those 3 or 4 kind of setups from a technical aspect are really what I'm focusing on, what I want to see on the chart. And again, the entry is most always, except for the support buys. The support buys are not these type of entries, but most of the entries are buying through that earnings day high. It's a very profitable setup, very easy setup. It's just knowing what to look for within these setups. Now again, and those support buys, they're also very good, a very different trade in our hands. We're buying off support. We have more time on our hands. We don't need to see that follow through as quickly versus the momentum setups. We need to see that follow through right away. All right. So I hope, channeling it down to those 4 setups helped you guys a little bit. That is clearly what I'm very interested on a chart. I want to be very specific in what I'm looking for, and I want to be very picky. Remember, that watch list I have is over 300 names. I only want the best of the best. I only want to trade these 5 setups this week because these are the perfect ones out of those 300. So it's about being picky and having the right criteria in order to find success during earnings season.